So, hello everyone. Officially, very warm welcome tonight to the second part of our advanced practical application futures course. As I just said, it's the second part after yesterday. So I hope everyone it looks like almost everyone who is in the room today also participated in yesterday's live session. So everyone should have watched, obviously, the first part of the practical application advanced futures course. So today is Tuesday, July the 13th, and it's 6:35 p.m. here in Dubai. So we basically just continue, right, where we stopped yesterday with placing orders. So if you guys have any questions at some point of time, content related, of course, please just type it in the chat and I will address it almost immediately, right? And if you feel like, because this might be because you have done the analysis in TradeStation, obviously, if you want me to spend a little bit more time on, hey, placing orders, whatever it is, right, on one specific topic, well, then just let me know in the chat box as well. And then I can just spend a little bit more time on these topics, like placing orders on the matrix or on the chart trading part. All right. So that's basically right, the chart from yesterday. So we placed yesterday orders, right, on the S&P 500 on the contract, on the September contract 2021, but they are gone. So $5 million question. Why is that? Does anybody have an idea why the order is gone? Why the order is not in the system anymore? Because it's not showing anymore. Has anybody any idea why the order is gone? No, the sim is literally like, the sim is really like 100% reflecting the, I have to say, the sim is 100% reflecting the live trading account to, with one exception. The exception is you don't get slippage on the sim. You don't get slippage, right? So we will talk about this maybe another time if the question arises, but in this case, it's just everything is like in a live environment. So Rose, yes, the order expired, right? Very important that you, Rose is right. The order expired. What does it mean, the order expired? So when you place an order in TradeStation, you have to, and you want to keep it in the system, make sure, we talked about this yesterday, the duration. Here on the matrix, we set it to GTC, good till cancel, right? And not today, right? And here we would need to change it as well to good. It was set today. So always make sure, because day doesn't make any sense, right? You don't want to have the order, if you place a set and forget order, you don't want to have it in the system only for the day, right? Why? It doesn't make any sense. I would not, I don't know any reason why you would have it in only for the day, right? Doesn't make any sense, right? You will always, you should always put it to GTC, good till cancel, until you cancel it yourself. Okay, clear? So that's why the orders are not in anymore. So we did yesterday the matrix, right? We placed an order on the matrix. Looks really fancy. It's also very convenient. The only limitation is if you, what was the limitation? I find the limitation, if you place an order, right, that is kind of far away from current price, the scrolling is getting the scrolling up and the scrolling down. And you look here, the font size here is already very small. You can change obviously the font size as well on the entire matrix to make it a little bit bigger for you if this is too small for you, but it's now already, I think, font size 8, so very small. So even if I want to do a set and forget order that is a buy order that is far below, or a sell order, a short order that is far above, the scrolling becomes super annoying, right? So that's why that's the limitation of the matrix. If you want to have an order that is around current price that has to go quick, then the matrix is, I think, the place where you can easily place an order, right? So, but then you have, we quickly at the end of the session, we placed an order on the chart trading. So on the chart trading tool, so here basically it's very simple how to place an order. What you should do always, mark, of course, I mean, you have anyway, when you place an order, you should basically mark your zone, because if you don't mark your zone, if it's like this and you want to, let's assume now you want to place an order around that demand zone, right, without having a horizontal line or anything that marks the exact price, and I press Control left mouse button, you see it doesn't really, I mean, it doesn't really show me where I mean, it shows here to the right where I placed the order, right? But you make yourself you make your life much easier if you have, let's assume you want to have it on the, exactly on the wider version, that you place a horizontal line on the wider version, use snap mode, right? You use the snap mode, so it's exactly on the wider version, and then you can now move it nicely up to the exact price and then click yes, right? And then you can also adjust. Right now, why is the again question, why is the stop loss and the target so close? Why is everything so close next to each other, close to the entry order? Why is that? Because of what? Also very important that you change this maybe right in the beginning and save it. Why is the target so close? Yes, exactly. So it's what's the key here? The offset, right? So change the offset, always change the offset here, right? The offset you change always on the 3 dots, on the matrix on the 3 dots, here on the chart trading bar on the 3 dots, and then you can change the offsets. Actually here the offset, we did already 50. It just looks like it's small because it's a daily zone. And then you can just really drag and drop. Very, very simple, right? So, and you see how quick it is. So now in general, and I wanted to address this yesterday, but I didn't have the time yesterday because we were already done with the time. The point of to calculate your, I mean, the risk, the position sizing, right? The position sizing, there is no way with TradeStation for TradeStation to do it like automatically, kind of, right? With other brokers, you know, like Equity or IG, it's very simple that you do basically, it's very easy to calculate your position size, because there's always a system behind where you basically easily can calculate your position size. So why is that? Because you have always these CFDs where you have standard lots, mini lots, and micro lots, right? And then you can fiddle around, and if you want to trade one, and you can trade 1.23 lots or 0.12 lots or 0.58 lots, right? And you get always exactly to the risk amount that you would that meets your risk profile, right? So if your risk profile is $500, you can always risk this $500. So please listen to that, because this is really important when it comes to futures trading, right? Because now here with real futures, that's some kind of a limitation, because you can only trade full contracts. Because you trade these are real physical contracts that you are trading, right? This is not a derivative. You have a contract with somebody else, right? A buy contract and a sell contract. So you can only trade full contracts. You cannot cut the contract to half, or you can quarter the contract. It's not possible, right? So meaning you can only trade one contract. You can trade a mini contract now, right? Because we're going to look in the minis and the micros as well, where we, for the products where we have minis and micros. But in general, you can always trade one single contract. What does that mean? Remember yesterday, we calculated the risk size for this the risk size for this zone. You remember, right? And this is how you always, you have to do this always manually, right? It's a little bit of a bummer, right? That you could create an Excel file. I've never used that. I mean, I've always done this manually. It's once you got used to it, it's really also quick. But it's just very important. It's just different compared to what you are used to with like all the Forex brokers that offer CFDs. So now you have to basically the first step, and this is meant, right? And please rewatch the futures course. This is where we explain how the position size is being calculated. And this is always the same way for each and every product. This is how you calculate basically the position size. Again, right here, if the risk for this zone is basically, what did we calculate yesterday? $3,500, let's say $4,000, right? So let's assume from entry to your stop loss is $4,000. And let's assume as per your risk profile, you're allowed to trade a risk of $5,000, right? You can still only trade one contract. So your risk will be, even though you're allowed to take $5,000 of risk per trade, here you can only take $4,000 of risk. Does this make sense? For everyone. So with futures, you can never be fully exact, and you can never fully meet your risk profile, right? You have always be a couple of dollars more or a couple of dollars less. So if your risk profile, for instance, is $3,800 or $3,500 and the zone is $4,000, well, then you can then you have to make a decision, right? For instance, right? Or if you're allowed to take $10,000 of risk, well, and this is $4,000 per contract, then you can take two contracts and your risk for this zone is $8,000, right? But you cannot go up to $10,000 because you can only take two contracts. Does this make sense? So that's somehow, when it comes to fixed risk, a little bit of limitation. So you cannot have the really fixed risk in the futures market. Right? Cool. So this is now chart trading. Okay. And as I said, you can play around with that a little bit by yourself. You can enable keyboard trading where you can have basically short, because right now we have shortcuts for like everything: horizontal line, rectangle, Fibonacci, right? We have hotkeys for all these drawing tools, but you have also hotkeys. You can create hotkeys then for keyboard trading here, that if you press, I don't know, L, and then it places automatically the long order, or S for short, right? But I've personally never done that, because pressing Alt and left mouse button, or Control and left mouse button for placing in orders, it's also very, very, very simple, right? But again, it's completely up to you how you want to do it here. Yes, it's just like a little bit of practice here and playing around with your new order placement toy, so to say. So what else we can have here? So matrix, order bar. So let's look at matrix chart trading. Let me cancel the order, cancel all, gone, perfect. So now this is another fancy way how to place orders, right? So now let me go to the old school way how to place orders. So the old school way is basically, if you have your, or let's assume you have your zone here again, no snap mode, target up here. So you can go to order bar. So this is the old school way. So let me find quickly the order bar. Where is the order bar? Where is the order bar? Where is the order bar position? Trade bar. I think it's the trade bar. The order bar is the trade bar. So let me click on here. View trade bar. You see now this window is opening. So also here, you can click on, you see here, you can select the quantity, the order type, limit, buy and sell. But what you're going to do is basically you click here on OCO, OSO, because anyway, you always want to have that bracket, right? You just not want to just buy or sell something randomly without any stop loss or target. You want to have basically your bracket in place. So you click on OCO, OSO, and you see this window opens. Now, you have here many things like breakout order, breakout fade buy. It's all fancy stuff you don't have to worry about, right? So what we want is entry single long order long or entry single order short, right? Only that, right? Don't be bothered about this fancy stuff here, whatever fade sell, fade buy, breakout. Like, it's a lot of possibilities, but most of that stuff is nonsense. So stick to what you're used to and what you're anyway using, right? Buying lower, buying higher, right? Buying lower, sorry, or selling higher, waiting for price to come to you, right? So if you now want to place one contract, one order, here entry single order long. If you wanted to go short, you would go entry single order short. So long. So here again, make sure you see here when it comes to stop loss, they offer you two kinds of stop losses, the limit level or the stop level. You don't want to have the stop limit, never the stop limit, because when price comes close to your stop loss, you want to get out market. So you make sure your stop loss gets that you get filled on at your stop loss at market price, right? So now if you're allowed to trade one, so you would go here, one limit and one stop loss, right? You can have two targets, one stop loss, three targets, one stop loss. Again, multiple choices, but usually, right, we need one target, one stop loss, right? You click here. And you get that this new window opens, right? Here, now here you see basically this, the first column here, the first line, this is your order, whether it's a buy or sell order. You could change it here, buy, sell, blah, 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 quantity, order type, limit. But we clicked anyway on buy, so we want to place this buy order, right? Now here you see these two orders below. This is your bracket. This is your bracket around the entry order. So now we start with the entry. So it's a limit order. And then we can type here in the limit, right? And we know the entry is here 411250, right? And we just type in 4112.50. Press enter. And this is our entry. Now here, we have to change now we have first the target and here stop market. Stop market, we always know stop market is the stop loss, correct? So if we are here with the limit order, we have to click here for the limit order for the target. Also here we have, I don't know what we have, right? Split, shave, hit and take, offset, primary fill, all nonsense for us, right? All stuff we don't need. So we need custom price because we have a fixed target. So we click on custom price. And now we can just type in the custom price, our target, 4, 3, 1, 2. Let's round it up and press enter. Now our stop market order, again, we have to basically now here do as well, here offset for primary. Again, we're not doing an offset, right? We're doing custom price. I click to custom price, type in the stop loss price, 4027, press enter, bam. And now I can send the order, and then the order is in the system. I can do something. I can do actually two more things, and let me just quickly explain. I don't know why you would want to do that, but I'll just explain. Well, I can explain it to you. Maybe at some, yes, maybe you want to do that actually at some point of time. You have send and stage order, and you have only stage order. So if I click send order, the order is literally in the system. The order is placed. So your set and forget order is placed. If you send and stage the order, means the order is in the system, and staged, the order is saved in the background, meaning that even if you cancel the order again, the order is still saved in the background, not placed, but you can easily, because it's like saved, you can bring it back and place it again without typing in the numbers, because it's saved. This order is saved in TradeStation, not as a set and forget order, so not in the system, but in the background. So you can bring it back and just place it again by just clicking place staged order, and you don't have to type in the numbers again. Or you can only stage the order. This maybe is quite interesting, because if you have a big watch list, right, of trades, a huge watch list of trade ideas, you can always stage these orders, and when price comes close to these trade to these to your entry price on certain trade ideas, you can then basically just click on one of the stage orders and place it, and you save basically some time potentially, because the order is already it's already saved in TradeStation, and you just then click on okay, place staged order. Okay, does it make sense? So we now just going to send the order, click yes, and you see now it shows here again, because we activated chart trading as well. So these are the 3 ways how you place orders on TradeStation, right? The old school way, order bar, where you just type in the numbers. Chart trading, fancy, where you can drag and drop the lines. Or matrix, that is futuristic, where you see basically, or if you're in the trade, you see the green red bar going up and down depending on whether you are profitable or negative, right? So it gives you options how to place orders. However, right, one limitation in terms of position sizing, right, and calculation, and your and calculation and calculating your risk, you always have to do it yourself manually to calculate, hey, what's my risk on that zone, and how, based on that risk, how many contracts am I allowed to trade? Does this all make sense so far? Do you want me to elaborate there a little bit more? Is there anything you want to touch on more in sense of one of these order opportunities? Maybe we're gonna do at the end of the course a little bit of position sizing together, but but at the end of the day, this is simple math. Everybody should be capable of doing that. So all clear? Perfect, right? Really nice. So now let's go now. I hope everyone downloaded the Futures Matrix workspace, because now we do this together here. This is the back month. This is supposed to be the front month. Okay. What we're gonna do now, we fill in right together the radar screen. So we have an up-to-date radar screen with front month and back month. So why do we do that? Because obviously, why do we do that? Because we always want to have, because we go through the analysis on all the products with the unadjusted chart, right? We have our weekly income worksheets, our monthly income worksheets, our daily income worksheets, and we have here all the basically almost all, right, symbols, but these are unadjusted symbols where we cannot place orders. So, and if we now want to place an order on the S&P 500, if you want to place an order on gold, if you want to place an order on the euro, we always need the front month, right? Normally, right? We can place an order on the back month, maybe something we can discuss as well, because there is an advantage of placing an order on a potential advantage of placing an order on the back month as well. We get to that, but usually we want to take the front month and just place an order, correct? So, and therefore we should always have the front months listed here and to know actually when it expires. So this framework I've done long time ago, and you see here in 2018, of course, the S&P, you see here, this one is for the front month. So what I'm going to do is I'm just switching both, because I want to have the back month here and the front month I want to have here. Makes more sense, right? In terms of, because once the front month expires, the back month becomes the new front month, correct? So having the front month here makes a little bit more sense. So obviously the S&P contract December 2018 that expired, it's already expired because it expired 21st of December 2018. And here on the radar screen, I added a couple of columns for you basically also to make your life easier, because I added expiration date and I added first notice date, I added volume, and I added open interest. All of that important, obviously, to understand when do I have to roll over, correct? Open interest, also very important, maybe a little bit confusing for one of the other, but we're going to cover open interest in a different lesson, not today. Today we cover the basics basically. And today what I want to do with you guys now is start with the equity indices and add the front month and the back month for the equity indices. look at the specifications, tick value, and of course, expiration date and first notice date, if there is one, right? And let's see, then we look into the mini con in the, they're called e-minis, right? But into the normal contracts, the full contract size contracts. And then we look into the new micro contracts, right? I have to get the wording right? Because the real contracts are called e-mini. It doesn't mean they are mini contracts, right? They're called e-mini because they're electronically traded. That's the wording for electronically traded contracts, right? E-mini, right? So we look at the new micro contracts that has a smaller tick value, and then we see if we can also cover today the interest rates, but I want to at least manage to work on the equity index group. So again, and let me be a little bit, because otherwise I feel like it's a monologue for 1.5 hours. I would like to have this a little bit interactive. So I ask a few questions here and there. How do I now know what is my front month? How do I know which contract to trade? If I want to now look at all the indices, so let's start with the S&P 500. How do I know which is my contract to trade? So everybody should know by now, I should trade the front month. But how do I know how to find the front month? How do I know that? Where can I look it up? Perfect. Bar chart. Yes, that's one. Bar chart. Yes, yes, yes. Easier way. TradeStation. Exactly. TradeStation as well. We're going to look at both. How do I now check it on TradeStation? How do I look it on TradeStation? Nope. On the platform. We did this yesterday quickly. How do I see what is my front month? If you guys remember. Let me cancel this order. Nobody knows. So if I, and that's the purpose. One of the, let me say, one of the benefits, not benefits, I don't want to say benefits, but one purpose of using the, which chart? Which chart is that? At ES, that's the, is it the unadjusted or the adjusted? No, that's the adjusted chart. At ES, ladies and gentlemen, I see you have to do a little bit of futures practice here. Oops. You guys have to get used to that, right? So you see what is now a little bit annoying. So you see the chart trading is always switched on. So if you click right mouse button on the chart, go to chart, click again on chart trading to switch off the chart trading. Otherwise, it pops up every single time if you open a new chart here, right? So, ladies and gentlemen, this is the adjusted chart because it doesn't show the rollover gaps, right? So, adjusted chart. And on the only on the adjusted chart, I see the front month being displayed here in the brackets. So it's the September. So I can now get out my cheat sheet and look up the letter for September, and then I can plot the front month, right? I know the letter is U because we did this, we just placed an order on the S&P 500. So this is one option, right? You guys were right by saying, hey, and let me get the website as well. Bar chart. And this is the website to go to because it's very simple and very much straightforward. You would go to futures, Now we go to indices. And then you see here all the available indices that are tradable in the futures market. Don't bother so much about the symbol, because sometimes the symbol in general can vary from the symbol in TradeStation. You see the Russell here, for instance. The Russell symbol is in TradeStation is not QR. The Russell symbol is RTY, right? What is important though here is the letter, and then you know the front month. So if I click on, just I can open the September one, right? Does this, I can open the September one, see a lot of data here. Even I see the commitment of traders position here, the long short positions compared to last week. A lot of data here, contract size. You see here the point value, $50, the trading hours, the tick size. You see, I have a lot of data that is in the cheat sheet here on the website as well. So the contract specifications, right? So it's pretty decent actually to have that here, everything like also on that website. Especially the trading hours are very important, because if you look at some commodities that are not traded 24 hours and are traded only a couple of hours a day, we should always be aware of the trading hours, but we're going to look at this also obviously then more in detail. So just that you know that you can always open the contract and then you see all the contract specifications summarized, the commitment of trader positions compared to last week, and so on and so forth. A lot of data here compiled. It's really great. Now let me go back. So you see here right now, you have here two contracts that are, so the S&P 500, right, or the indices in general, they roll over every quarter, right? And currently you have two contracts in their life cycle being traded, and you see them listed here. It's the September one, and you see the December one. So the September one in this case is which one? Is September one the front month or the back month, right? I hope this is a question that is kind of self-explanatory. Which is the front month? Which is the back month? I ask anyway, front. So September is the front month. Perfect, right? So this is the one that I want to trade, right? And you see it also, what is really, you see the big gap in what? In volume here. On the indices, you see literally nobody is trading the back month. This is something specific on the equity indices. Everyone, literally everyone, institutions, retail traders, everyone is trading always the front month. And if they are staying in the position for a longer period of time, they basically roll over once the rollover process is about to happen, right? Now here, but for commodities, for instance, you will see that sometimes even the back month has similar volume to the front month, or sometimes the back month has even more volume than the front month. But we're gonna, again, look at this very specifically for each and every commodity then out there, energies and metals, especially for crude oil and so on and so forth. It's going to be interesting to look at volume, and then at some point of time also at open interest for all these contracts. So theoretically, you could trade also the December contract, right? But to get filled on that one, good luck, right? There are literally no contracts being traded, right? So now I know my back month and I know my front month. So what I'm going to do is go back here and just change this one. ESUT 21 and click enter. Here on the back month, I do the same. ESZ 21, enter, boom. And then you see also the volume showing up, right? So now the good thing about how we set up this radar screen, you have the expiration date here always listed. And also if there's a first notice date, you have the first notice date they listed as well. So on the equity indices, you see the first notice day is empty. There's nothing here listed. So what means that you don't have to worry about the first notice day, and there's only an expiration date. So you have to roll over around. So when do you have for the S&P 500, the front month, when do you have exit? When is the latest date you have to exit this contract? When is the latest? 17th September. Perfect, right? It's saying here, right? Then you either do what? If you're long the S&P 500 right now, then you have to either you have two choices, right? You can close this position, take profit, and go away. Or you close this position and you roll over to the back month. By then, the rollover process started and the volume you will see is shifting heavily, right? And you see that based on that symbol here, if I click on S&P, this is the unadjusted, right? So this is the unadjusted contract. So the rollover process is happening 7 days before the contract expires. So the volume is basically shifting 7 days, starting to shift 7 days before the contract expires, right? And therefore you have this again is explained in the futures course, how basically the unadjusted charts are being plotted or being created in general, and the purpose of these unadjusted charts. So 7 days before the contract expires, this is when the rollover process usually happens, plus minus 1 day. And then you will see the volume here shifting from here. So this volume being very, very, very quickly decreasing, and here from the back month quickly increasing. And this is when you see that live basically on that radar screen. That's why we have listed here the front month and the back month. And then you basically know, aha, okay, it's close to expiration date. The volume is here decreasing, the volume here is increasing. So let me decide, shall I close my position now? Shall I roll over? What shall I do, right? What do I want to do, right? So that's very, very convenient then to have here always basically here in this workspace listed. So now we have it for the we have it for the S&P 500. What about now the rest of the indices, ladies and gentlemen? What about the rest of the indices? Do we have a quick fix? Is it different? Is it different for the Nasdaq, the Dow Jones, Russell, or is it all the same? What do you guys assume for the equity indices? Do we have a quick fix? Equity look all same letter. Yes, exactly. So for the equities, right? Perfect. Even for the Nikkei, the letter is still the same. Let's look. The letter is still the same. So we have a quick fix, so we can do that. So let's do this together. I don't know if you have that window basically opened or not, but we that window, that workspace. So we do that together. And did I first? What happened to my expiration date? First notice. Now everything is open again. Weird. So NQ, so NQU21, RTYU21, YMU21, NKU21. Let's quickly do it then for the back month as well. NQZ21, RTYU21, YMU21, NKZ21. Right? So we have it now, as you guys can see. Now, a very quick fix for all the E-mini contracts on the equity indices, right? The front month here, including the volume and the expiration date, and we have the back month here, including is with YM. Perfect. Thank you. Somebody's, you guys are watching. Thank you. Yes. YMZ21. It was just, I wanted to check if you guys are with me. Perfect. RTYZ. Perfect. So now it's correct. Perfect. Yes. Absolutely. Thank you. Right. And you see the volume difference, right? Nobody is trading on the equity indices the back month. So we don't have to worry about the back months at all until, right, until we are close to expiration. So now if we quickly do one thing, and I want to show you, this is linked. Perfect. So this is linked. I just want to show you one thing, right? Now, obviously, now on the NASDAQ, right? If I buy market now on the NASDAQ, now you see in terms of tick value, now every market, you see how quick the NASDAQ, you see how quick the NASDAQ is moving. You see now, this is now action, right? So, and you see on the matrix how the matrix is funny, right? So the tick value on the tick value on these equity indices, for all of them, it's the same. It's different, right? Where we had on the S&P 500, the tick value $12.50. Here we have a tick value of $5. So the tick value is much less on the NASDAQ. However, if you remember yesterday how kind of slowly the S&P was moving when we placed the order, and now you compare it with the NASDAQ, how quick the matrix is moving up and down, then you can basically assume that yes, on the NASDAQ, the tick value is smaller. However, the price is moving much faster, right? So you see how the matrix can be very attractive. Like it's as I said yesterday, having this in there is really it can be really addictive, to say the least. And well, you see my orders, you see how quickly I got filled, like I got stopped out, how quickly price moved down on the NASDAQ. It was like 10 ticks or so, quickly, $80 gone with the wind, right? Because I placed one contract. So imagine I'm placing a trade with 10 contracts, and then you see how quickly this price is moving, right? So yeah, on the NASDAQ, you see also the increments, how price is moving. You have also price moving, for instance, here from 1400, 990, you see in quarter increments, and also four ticks equals 1 point, right? 1 tick, $5 times 4, so $20, 1 point. So this is how you would then calculate your position size, and therefore then also determine your risk. So this is the NASDAQ. So if we look at the Russell, if we buy quickly the Russell, buy one order, market order, and this is always, you have the cheat sheet. Yes, you have bar charts, but I would always, you see how the system is sometimes lacking. So I don't want to get like filled immediately. So let's move the orders, the targets, stop losses up and down. So now here on the Russell, you see the tick value. So I would always, if you want to place an order, I would always first, and this is how I used to do it, just place quickly on the simulator, just check, okay, what's actually the tick value, and then the increments, how price is moving, and then you can also go into the live market, because here you see now, yes, the tick value. So maybe you can tell me what's the tick value and what's the point value. Can you see that? The tick value is clear, right? What's the tick value here on the Russell? $5 exactly. And what's the increments? What's the increments the Russell is moving? Can you see that on your screen? Seven, 8, yes, in 0, 1, perfect. So 10, so exactly, point is 50, François, perfect, right? So the point value is 50, right? It's from here, 45 to 46 is 10 ticks. From 46 to 47, 10 ticks. From 47 to 48, 10 ticks. So 10 ticks equals 1 point. So 10 times 5, $50 point value. Perfect, right? So let's close this one here, right? As well. Let's show you on the Dow. Let's show you on the Dow Jones. Let's buy. And you see basically now, you see how fast the NASDAQ was moving compared to now how slow, for instance, Dow Jones is moving, right? You see that now here it's like kind of slow compared to the NASDAQ. So, okay, now it's starting to speed up a little bit. It was and I was listening to me. So now tricky question. What about here tick and point value on that Dow Jones? What do we see here? Well, that's a tricky question, because you see, there are no decimals, there's no comma, there's nothing after the comma. It's only round numbers. You see 3, 4, 8, 34,840, 41, 42. So there is kind of, as however you want to point it out, exactly tick is a point. Exactly, right? Tick equals point. So every move, so tick equals point, right? So point value is basically $5 basically, you could say here, the point value, right? Because yes, this is a tick, but there is no real point, so to say, right? Would be easy to calculate position side here on this one, right? Close. And you see, you have always the orders here. This is also on that workspace. You have all the orders here listed, always with the commission. So now the orders that is being placed, that is being canceled. You have even the staged orders. If we stage orders, right? If we save orders in the system that we maybe want to place later. If we are in a trade, so now let's do one more on the Nikkei. Let's buy market the Nikkei. So you see on the Nikkei, you see, wow, again, tick equals point basically, but here you have basically $25 immediately, right, on the tick, or however you want to call on the point, right? So a rather high tick or point value on that Nikkei. So all these indices, right? This is now basically just to show you here, we can go to positions. Here we would see the position that is currently running. You see Nikkei long, quantity 1, the average price, the open P&L right now minus 25. The total cost, right? So this is the margin requirement and so on and so forth, right? You have even here listed the contract expiration date here as well. Yeah, it's everything here basically that you need to control to check your running positions on that work on that workspace. So now these are the big contracts for the big boys, right? So let me close this position. Never click. So again, look, if I click cancel all, let me see what happens. You see, that's the problem. Now, sometimes you might think, let me cancel instead of close. What happens if I cancel my target and I cancel? This is somehow, I don't know, it's a little bit misleading if you ask me. If I click cancel all, it now canceled my bracket order. You see that? But my position is still running. So, but I don't have a stop loss in place anymore. So if you have open positions, never click cancel all. Make sure you click close. Understood? Very important point. A mistake that I did, I told you guys, I did, like, it was a rookie mistake. One of my first trades, right? Went south. That's why, because I clicked cancel all instead of close. And my stop loss was gone and I didn't realize that. So never click cancel. Make sure you close all if you're in running positions, okay? Close it. All right. So, as I said, these are the contracts for the big boys, right? So now, in the last 30 minutes or so, what are we going to do? We're going to look at the new micro contracts. of the equity indices. And we look at the tick values and the point values, right? Very excited because I have not really done this before as well. So let's do that. So therefore, I would say, so where do we put them, right? We want to have them here as well. So I would say what we're going to do is, and I want you to do this yourself as, right? This is an exercise you should do as well. I could now create that workspace, finish that workspace off in that course, upload it in the classroom, and then you have it basically. I don't want to do that, and I will not do that. I want you, because this is a practice that is really important, that you do it yourself, that you basically understand how you do it yourself, right? Because this is really, really important. This is, if you make any kind of mistake there, or you like place the wrong order on the wrong contract whatsoever, this can end up really, really badly, whatever, if you make a mistake here. So this is like foundational work. So that's why I want you to create this yourself. So now what we're going to do here, data, we're going to add a new label row. And then we're going to add a blank row. And we call this one, we're going to call this one equity index group micro. And we do the same here, obviously. Data, new label row, data, blank. So when we call it here also, we need this again, equity index group. These are the micros. Huh? Can I now? Okay. All right. So how do I find now? So where do I have to look up the symbols now? Because now I have a problem, or not a problem, but where do I find now the symbols for the micros? Hello, hello. Where do I find the symbols for the micros? Also, yes. But no, not really, because the symbols can differ, right? For bar chart, I look for the contract letter and the contract month, but the symbol, exactly, TradeStation website, perfect, right? So let me do this quickly on the other screen, and then I pull it over to my futures margin rates. All right. So here, right, pricing, I go to tradestation.com, pricing, futures margin rates, and then here I have the micros. So I have basically here the symbols that I'm interested in for the macros. So the macros that I'm interested in are this, and that. And do I have anything else that is interesting? Not really. So cryptos, we look at another day, not today. Today is quick only indices. For the Nikkei, unfortunately, there is no one, right? I don't see one for the Nikkei, right? No, there's no for the Nikkei. And by the way, the VIX, right, the volatility index, we can check it out also next time. I would say something that I've not figured out how to trade. I don't think we can trade it anyway. It doesn't make a lot of sense to trade. It's like the inverse picture of the S&P 500, right? So I don't see a point of trading this anyway, but we can just look at the chart because we can plot the chart on the on TradeStation now. Before we couldn't do that, we can do this now. So we need these. So now I have the symbol. So can you now think about, so how do I plot these charts? What do I need to plot? I need to do a few things here and there, right? What do I have to do? Because they are now different animals, right? This is it's like it's a different chart, right? It's the same product, right? It's the same product, but I have to plot it. So which charts I have to plot to do like the trading for these and the analysis, because we have to plot it for the analysis purpose. We have to plot it for the trading purpose, right? So what do I have to plot here? If we start with the S&P 500, I mean, you can derive it now from the S&P 500, right? Perfect. So what exactly? So this is the M. So Francois is saying, I need to plot MESU 21. So for what do I need to plot this one? And where do I have to plot this one? Perfect. Dennis is also on the right track. Exactly. But what else do I need to plot? What else do we need to do? In our All Asset Mastery class, what are we looking at? At which chart? The unadjusted, right? The unadjusted, right? The unadjusted, right? Guys, it's always 50-50 and you guys always get it wrong. We have two of them, adjusted and unadjusted. I see. I think we have to do like a session on that again, adjusted, unadjusted. I'll do that. I'll keep that in mind. I think there's a little bit confusion here. I see. Yes, but we have to plot the unadjusted chart because we have to do the analysis on these as well, right? So perfect. So I'll move that over there. So you have that. You can open that for you as well. Just that I have space here and I see what I have to do. So now what you would need to do is, I'll do it here quickly. Open this radar screen because we need to do the analysis on these micros, right? Because this is where we potentially going to place an order. So I have to do the same here. Data, add label row, call it equity index group micro, data, add blank row. So now this is now very simple. It's of course it's the same product. It's just a micro, right? The symbol is the same. In front of the ES, it's just an M for micro. So $5 million question, what could be here the unadjusted symbol for the S&P micro? Please type it in the chat and please type it right. What's the symbol for S&P? And then for every other product, it's basically the same. And we want to look at the unadjusted. What's the symbol? Bum, 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 bum. Perfect. Thank you, Francois. Thank you. At MES equals 107XN. Right? So let's do now something exciting. And you see basically, you see, of course, because this is just, this is basically a derivative, right? And now you see here something that was expected. CUT net position, fundamental data not available because it's a derivative, right? It takes the data only for the E-mini, right? So let me remove that. And if I now look at the chart, we make this a little bit smaller. And click here on the S&P 500. And now I click on the micro. You see the chart is now exactly the same, right? The chart is now exactly the same. But if you wanna, I would always recommend you, if you trade on the micro, that you also plot the micro, just to be like consistent, right? That you're not like getting confused. You're plotting on the E-mini, but placing an order on the micro. Just plot the micro here as well, right? So you would need to do this now, and we quickly do that because this is at Planck. We need only 4 at Planck, at Planck. So of course now for all the others it's exactly the same. So at M and Q equals 107 xn. That's the micro Nasdaq. Now the Russell symbol is a little bit different. You see the Russell E-mini is RTY. The micro Russell is M2K, right? Just to keep that in mind. M2K. Yes, M2K equals 107 xn. Yes, it's loading. And then the Dow Jones is at MYM equals 107 xn. And now we have the micros here. Now we move into our matrix and we do the same exercise here. And you mentioned already, I'll add 4 columns here for rows, sorry, for rows. Here as well. Perfect. And I now, and you guys mentioned it already correctly. So it's the same exercise that we do here. So MESU 21, boom. M and QU21. Please double check if I'm not making any mistake here. M2KU21 and MYMU21. And you see already, I hope that once you do it yourself, the whole list of all these markets, it gets repetitive and it's kind of self-explanatory, and you get used to it, and it takes away the fear of, oh, I have so many different contracts, front month, back month, what do I have to do? It gets really, really simple, I think, following this methodology how that we created here. So now the back month, oh, no, not here. There's no undo button. So if I make a mistake, screw MES set 21, M and Q set 21, M2K set 21, MYM set 21. And you see now one thing that is amazing is the volume. Expiration, of course, is the same, right? Expiration is the same because it's just a derivative. It's the same. It's just a micro contract, right? So the expiration date is the same, but also the volume is really, really high. You see the Nasdaq volume of the micro is even higher than on the normal. So you see the high volume here, which makes it now for us very safe to trade. It has high volume. So let's do something exciting and let's look at the point value, the tick value on the micro. Let's place, let's buy. Am I here? Let me just at the right mouse click, data. Sorry, data. Yes, no, settings. I want to see the quote bar. Perfect. So let me buy market. Oh, wow. You see now, instead of $50 point value or $12.50 tick value, my tick value here is only $1.25. And my point value is $5. So 10 times less. 10 times less. So now let's do the following here. Let me go back to that one. So we have the zone here with a normal contract, right? With the normal contract size, $50 point value. The risk on this zone from here to here, right? Of course, our stop loss would go a little bit below, but it's just now, we're going now from proximal to distal, would be 3,375 US dollars. Now, if we do that exercise, with the, right, it's $5, right? So what is it, ladies and gentlemen? I hope everybody can do this math. Right? Plus 2 ticks. So it's basically $737.5 US dollars risk, right? Per contract. Now, question. Now I think everyone can trade this daily zone, right? With a micro, perfect. It's amazing. And you can trade real futures. Now, if you allowed $5 million question, if you allowed, if your risk profile allows you to trade $1,000 risk per trade, how many micro contracts can you trade on this daily zone? Taking it perfect, right? Boom, in your face. Correct. 3 contracts, right? 3 contracts. Perfect. Right? Exactly. Nice. Amazing. Good stuff. Good stuff. So let's close it. Let's look at, I remove this message. Otherwise, if you trade live, and you should always have it in the order confirmation just to double check, but now it's just bothering me. So I just removed that. So let's look at the Nasdaq. Let's buy the micro Nasdaq. You see, look at this now. Wait, you see how quick this is moving. And let me move. So, NASDAQ. But you see immediately the speed of the NASDAQ is something else, right? This, if you do like quick in and out, this can, that's why offset, right? If you do matrix and if you do market, make sure your offset is far enough. If it's 10 ticks, you can get filled immediately. 10 ticks for the NASDAQ can jump in a millisecond. You don't even realize it, right? So now 50 cents per tick, right? So it's basically 50 cents times 5, right? It's $2.50, $2.50 the point, right? It's literally nothing. Also here now, you could do then the math and see if it's worth it to trade the micro. And you see here the total cost per contract is $1,760 dollars, right? That's your margin requirement for the micro, right? And then you see how quickly it's also moving, right? With one single micro, you see how now it's hitting my $12 target in a second, right? Come, right? Right, and by the way, now I could move my stop loss here to break even. You see here, I moved my stop loss now to break even. Now I moved my stop loss to break even. So this is really nice if you do some, I don't want to mention it, day trading, but I don't want you to day trade. But you see now, I just check and drop. I moved my stop loss to break even. So I just moved it from down here up here, just drag and drop to 0 basically to my break even. You see now, and I can now sit in front of it. And this is what I was doing in the past, sitting in front of it and now waiting and you know, screaming at the matrix, go higher, go higher, go higher, go higher, and wait until it hits the target, right? Again, really addictive stuff. So let me close it. Perfect. Now let's look at the perfect timing. The Russell by market. Also here 50 cents. You see the increments is always the same as the E-minis. So 10 ticks equals 1 point. 10 ticks times 50 cents. So you have $5 basically point value on the Russell. Cost per the margin requirement, 715 US dollars. You see it here basically, or you see it also right on the TradeStation website here, Russell, initial margin 715, maintenance margin 650. Close. Don't press cancel, right? And now on the Dow Jones, let's press market. Also here, 50 cents. So everywhere 50 cents. Here you don't have, right? It's like point tick is equals point. Everywhere 50 cents except the S&P, it was $1.25, right? And this is stuff then you can note it down, create your own Excel. Yes, very simple, very straightforward. And then you can do your math if it makes sense for you to trade the micros, if you're fancy to trade the micros, or you stick to the CFD, right? This is something you have to then completely evaluate for yourself if the margin requirements plus the advantages of futures make sense for you to move to the futures for the equity indices, right? Not in general now, because we're gonna go through all the products, but for the equity indices, if you say, hey, for me still, I want to trade the equity indices on CFD because I have maybe more leverage whatsoever. But yeah, that's basically something you have to evaluate for yourself then. Cool. So let me close here as well. So that's it. So perfect timing. 1 minute before 8, we covered the equity indices. That's what I wanted to cover. We created already the radar screen, front month and back month, the unadjusted chart as well for the new micros. And that's basically the process. That's what we're going to do for all the available markets, right? And once we have done this, end of the week, maybe we need some days next week as well, then we have an updated radar screen matrix workspace that you can work with and that you can then update depending on whenever something is rolling over and something expires and so on and so forth. But we're going to talk about the rollover process and again as well tomorrow, because tomorrow on the interest rates we have something called first notice day, something that we have to then also again that I want to review again and explain a little bit more in detail. Right? Cool. So that's it for today. Thank you for joining. And I hope I'm going to see you live again tomorrow. I would really appreciate that. Have a good night and talk to you guys tomorrow. Bye.